Nakachi here with Daily Profit Cycle. It's Thursday, August 19th. But the choppiness in the market, let's start right there. It's been a monthly thing. We've talked about that, monthly volatility that's expressed itself every month so far here in 2021, and how that, until recently at least, hadn't been an indication that things were changing. But now, as I'll talk about today, a couple of different things are afoot. I've been telling you for the past couple of weeks that a rotation was at hand, that different sectors were leading the market. That has turned out to be the case, with utilities becoming a defensive sector, as really the entire collective market tries to figure out what's going on here with these things that are afoot. So a bit of strength in the dollar has pushed commodities down a bit. Weakness in oil and in copper. We'll continue to watch that to see if it is a true changing of direction or is a pullback. Another important thing to watch is the 10-year bond yield, which I have on the screen here. It's been doing battle with 1.3, which I've mentioned a couple times, is a key level, and sort of if it breaks and maintains below that yield, good for things like gold, which do well when yields are low, and as yields start to rise up, or if they remain above that level, things like gold not doing as good. So you'll see here that it's just bouncing around that line, sort of the dollar testing resistance at its level, something like 93, 94 on the DXY, combined with late summer volume, combined with external market forces that are beginning to weigh internally on the market, like rising hospitalizations and infections from this Delta variant, which I guess the market is starting to price in as slowing down the economy that was recovering apace with inflation, which of course is going to get mentioned. And that's the thing that I've been saying, that growth has to keep pace with that inflation, or it's not going to be good. You're not going to get that Goldilocks market that we've had, where seemingly everything goes up. You're going to get a bit more of a defensive rotation. Exactly why I had premium members going into real estate and utilities over the past couple of weeks. So a couple of key points there, and then I'll move on. You have to control the things that you can control. You can't control external things like 20-year failed wars and global pandemics and people's comprehension or lack of comprehension of basic science. But what you can control, and what you need to control, is yourself, first of all, and getting the bigger things right. I've mentioned in these videos since I started them, the bigger market indicators that portend changes afoot. The stock market indices, yes, but the bond market is much bigger than that. The gold market is important. Global currencies are important, etc. And so if you can get the direction of big things right, you can get moves and timing right in the market such that you can rotate into sectors that are becoming favorable. I was talking a lot about energy in the first 6 months of this year, and now I'm talking about real estate and utilities more, because they've become the sectors that are starting to outperform, given the conditions that are materializing in front of us that I just ran through. So like I said, you get those big things right, you can harness bigger moves in the market. Buy the XLRE, for example, for real estate, or XLU for utilities. But then you have to go down with inside of that to get individual plays, which of course is what people want, and where you get more torque once you get the bigger things right. So if these bond yields are breaking down, and I think that gold and silver are going back into a bull market or a rising price environment, I can do a couple of things, of course, right? I can buy GLD if I just want to get exposure to gold prices. I could buy, a gold trust that's backed by physical metal. I could, buy a basket of gold miners if I thought the conditions were also right for those, GDX or Junior, for example. But really where I've made my money is not only getting those bigger moves, right? That's where you have your safe money, right? Your whatever converted Roth IRA money, protected tax haven, sheltered accounts. But when you're looking for torque and when you're looking for outsized bets, speculations, 5-10 times your money, which is how I've made the bulk of my wealth and help the most people who wanted to do that, is you have to go down within that sector. So let's stick with the gold and silver example and the rates going down. So I think now it's time to buy gold and silver stocks. Again, I'll buy the large gold companies. I was writing in Daily Profit Cycle a couple of weeks ago how I was starting to buy into like Kinross, for example. But then I want to take some shots, right? I want to take some speculative shots on junior miners, explorers and developers with share prices under $1, often under 50 cents, that have the chance to grow or increase by multiples as not only they execute on their plan, but the macro market is in their favor. And so that's why I have the mustache here. Is I've been doing a bit of silver prospecting. As you might have heard, I recently went underground in a silver mine here close to Spokane in the historic Silver Valley, where 1.2 billion ounces of silver has already come out of the ground. And I brought a video guy with me to record not only the mine and the underground itself, but to get some interviews with management. And that's sort of the due diligence process that I conduct. This is a small 75-cent silver company that I helped finance privately, that I got private members, high net worth members in at 25 cents. And so they've already tripled their money. And this silver stock just IPO'd and has a very high grade asset in one of the best silver mining jurisdictions in the world, and is continuing to add key members and key assets to their portfolio. And so that's sort of, peeling back the layers, right? Getting the big rates of dollar trend right, getting the trend in gold and silver right, and then using individual smaller companies to leverage that. And small silver companies in the past, like a Silver Standard and others, have gone up thousands of percent from the 50 or 75 cent level as they continue to build out their businesses. And so it's just a bit about how I build portfolios, how I look at markets, and how I do diligence within those sectors and at different risk levels with different sized companies. I'll put a link up so you can get access to that silver mine tour if you want it. And I'll be back with another video next week. Nikaj signing off.